Welcome, Anders. We've had a busy week from the US all the way to China. On Tuesday, we had inflation numbers from the US that were lower than expected, and equity markets around the world went higher. Are we out of the woods when it comes to inflation?
Well, I think you have a good point there. We've seen the US coming in lower. The day after, actually, UK inflation came in lower, and the same week we had a encouraging number for Sweden, and the week before that we actually had a really good number for the Eurozone. So the Eurozone is now slightly below 3, the US is slightly above 3, and it's very likely that UK, the Nordics are moving in that direction. So I don't think we have to have the same amount of conversation about stagflation and the risk of persistent inflation. It looks like most of these one-off effects from the COVID period and the Ukraine war actually were one-offs, and now we're heading into a period where we're moving towards back towards price stability.
Mm-hmm. Are we done with rate hikes in the US?
As a general statement, yes. I think Fed, ECB, Bank of England are very close to being done, and that's also true for the Riksbank. You might see one precautionary additional hike from Bank of England or the Riksbank, but from a fundamental point of view, we are at the top of this rate cycle.
In Sweden, we've had rate hikes to combat inflation, to bolster the Swedish crown. Is this still what the Swedish economy needs?
Well, I think the Riksbank are a bit on the more hawkish side, given that inflation has been higher over the last few months in Sweden. I'm not that worried going forward. Wages are under control. We had a very serious and responsible wage negotiation process. I'm actually not that worried about the krona either. I know that it irritates those who import or take tourist trips, but fundamentally Swedish industry is now very competitive. The decent productivity, very responsible wage increases, and a bit of the boost from the exchange rate, I think, will drive export upwards. It will take a bit of time because most of our trading partners like Germany, UK and the Nordics are in a slower period. But fundamentally, the Swedish companies are now taking market shares, and they are also very competitive when it comes to technology. So I think this is actually a good rebalancing of the Swedish economy from consumption and indebtedness towards production and investment.
Mm-hmm. US and China relations, we had Biden and Xi Jinping meet face-to-face outside of San Francisco, cooling geopolitical tensions, much prompted by economic interests on both sides. Is it time for investors to start looking at China again?
Well, I think both the US and China are putting an effort into stabilizing the relationship. It's been in a very difficult place over the last 4 or 5 years, and the fact that they are meeting is good. There's also been meetings between Blinken and Yellen and their counterparties, so the contact is being re-established. We still have a big geopolitical worry about how China actually views Taiwan and also the military capabilities that they are building. It is an issue that is one of the bigger worries for the global economy. At the same time, one should note that growth in China is now 5%. It's very reasonable to expect it to be close to 5% also next year. Inflation is very low. It's actually below 0. So the People's Bank of China can actually cut rates further. Most banks expect the RMB to weaken a bit, and China has a very large export sector. So that will put a little bit of boost into the economy. So if you look at valuations, the traditional metrics are on a very low level. So if you're looking for a growth case with a value proposition, some of these Chinese equities are attractive. I think one has to be really careful and think hard on how to position a Chinese funds, because you don't want to be in areas where the political risks are higher. So you have to find cases for underlying growth with good profitability, with owners that are long-term and serious, and companies with good corporate governance. Not the least, the environmental and social issues are very important. So And I mean, actually, that is the way we are trying to navigate this territory.
In closing then, equity markets and the impact that you see going forward for them of all of this.
Well, I think a major risk scenario has been stagflation, inflation remaining high even when growth is slowing down, and also implying fairly high risk-free rates. Government bond rates in the US were above 5%. It has fallen back a bit. We are at 450 now. If this is a trend and the long-term interest rates is coming down, let's say to closer to 4, if you look at the earnings outlook for US companies, it's actually fairly beneficial. It's 11% increase in the consensus view for next year, very much driven by tech. Microsoft, Amazon, Google, all presented really good reports. The cloud business is increasing. During 24, it's clear that we're going to see more AI tools being rolled out, and I also think we're going to see a bit of a productivity increase, given that GitHub and other AI instruments are being used more broadly among programmers, and the US have a fairly large tech sector. So yeah, I do think that one could be cautiously optimistic looking forward to 24.
Great. Little outlook going forward there. Thank you very much.
Thank you very much.
Day.